Hey guys, what's up? This is Francisco with Valerizo Capital, and today we're gonna do the market update video. We're gonna take a look at some of the major indexes, and then we're also gonna take a look at the UVXY. We're gonna take a look at the HYG, and we're also gonna take a look at bonds, the TNX. That way we have a clear understanding of what the market is telling us and what is the right side to be right now. Because remember, there's not a bullish side or a bearish side. There's only the right side to be. So let's take a look at the charts. Remember, guys, that this video is for informational purposes only and is based on my opinion and my personal analysis. So it's not financial advice. Let's start taking a look. Let's start right here with the Nasdaq Composite. Right here, I have you can see I have the ISIC, which is the ticker symbol in TradingView. And for anyone who's new to the channel, the indicators that I have on my screen, I have the trend oscillator developed by Sam James, and then I have the TTM squeeze developed by John Carter. Basically, the TTM squeeze helps me identify high probability moments in time when we're going to see expansion in price. And then the trend oscillator, which is the one on top, helps me identify trends. So that basically helps me identify that when the trend has a high probability of beginning, when the trend has a high probability of stopping as well. And then on the top, I have the EMAs that I have the 21 exponential moving average, the light blue line. I have the 8 exponential moving average, which is the orange EMA, and then I have the 50, which is the purple line right here, and then I also have the 200 daily, which is the pink daily moving average on top. So let's start right here. You can see that the Nasdaq Composite, right? We can clearly see that the Nasdaq Composite had a really strong move to the upside, right? You can see that the trend oscillator was telling us that we started trending somewhere around here. So that's the beauty of the trend oscillator, because it helps you get ready for what can be a very sustainable rally. And we actually had one that basically lasted for a couple of weeks. You can see that we had a squeeze, and then we had a very strong expansion to the upside. Now, however, you can see that the trend oscillator already broke right here, and now we basically gave basically all of the gains back, and we're back at the level that we were before we had that meeting in that Fed meeting that actually pushed the market higher. Now, you can see that I have a couple of vertical lines in my chart. These lines basically are sell signals that get triggered when we move below that EMA on the trend oscillator, and then I have another sell signal that happens when we move below that 50 midline right here in the trend oscillator as well. Now, you can see that I have a 0618 level on my chart, and basically this line was measured from this low right here all the way to this high right here, and now we're stopping somewhere around 11,564. That's the level where we actually pause. Now, what's my expectation for this market? My expectation for this market is to continue to trend to the downside. Why do I think that? I basically think that because of a structure. What is the structure actually telling us? You can see that we're trending in a channel. We're trading basically in a channel. This is a downward channel. So price structure is bearish, and you can see that we actually broke below this support level, which was 12,438. As long as price keep trading below that 12,438, the chance of another leg lower is actually pretty high. Why? Because it's just price structure, right? We have price structure right here. We kind of broke it. We try to come to the upside, and then we had a really strong selling. We have a pretty strong selling bar. And now we broke a structure completely, and also we broke a structure in the trend oscillator, meaning that any rally that we see into that 21 exponential moving average is going to be a really good opportunity to manage risk and then look for more downside. The 618 level that I have right here, I measure it from this high to this low right here. And I think that any move, if we happen to have a rally coming back into this resistance level, I think it's going to be a beautiful opportunity to then get a short. Are we going to get that next week? We, of course, don't know. the market could just break and continue to trend lower. However, given that we have been selling for many days in a row, I think that that a snapback rally has a higher probability of occurring, and I will see that as an opportunity to take advantage of it and then look for more downside in the market. Now let's take a look at another chart, which is we can take a look at the SPY, but the SPY is going to be basically kind of the same analysis. You can see right here that the levels that I have, and also these levels that I have right here with the kind of the dotted lines, these are basically just gaps. As you can see, I just use black candles, and the reason that I use black candles is because I just want to focus on trend. I don't want to be focusing on, oh, we have a red day today, now we have a green day. If we have a trend, I just want to be in the trend as much as I can, and the best way that I have found to do that is just by having black candles and then keeping emotions away and just focusing on the moving averages. Now back to the SPY, you can see that this chart looks pretty similar to the Nasdaq composite. I have my 2 sell signals active, meaning that I should be focusing only on short positions. And then if we just keep it super simple, you can see that we broke the bullish structure, and as long as we continue to trade below 409.60, then we have to assume that bears are going to keep the control of the market, and we just have to, basically what we have to do as retail traders is just to see which side is the side that is winning, and basically just join that side and then look for more continuation in the market. So any rally, as you can see, I also have the 0.618 level measured from this high to this low right here. If we happen to rally anywhere around this level right here, then I'm going to be using that as an opportunity to take a short position in the SPY and then continue to look for more downside, perhaps to somewhere around 380 or perhaps even lower, depending on how we see the market trending. You can see that we're also trading on a channel, so any rally here will actually come into 3 levels of resistance, which is the 21 exponential, the 449.60 supply level, and then of course the Fibonacci retracement, which is the 0.618, and then the trend line of the channel that we have at that level. We can take a look at the QQQ, the IWM, but they basically look the same, so I don't think there's much that we can talk about it. So let's just take a look at HYG, and this chart looks pretty similar to the SPY. However, what I find interesting about this chart is because it's the high yield corporate bond ETF, and basically what this chart is telling us is we can have an understanding of what is the risk appetite in the market. And you can see that the risk appetite is not that high, right? That's why this chart, this trend is trading below that 50 daily moving average. You can see that we actually broke the bullish structure, trading below 77.39. 77.39. And you can see that we had a pullback into that 50 daily moving average, but of course the trend oscillator was already below the 50 midline, meaning that the selling pressure is actually pretty high. So as suggested, a rally to that 21 exponential moving average was an opportunity to short, and now we're trending much lower. Now, what's my expectation here? The probability of a rally all the way to 77.39, I don't think is pretty high. However, maybe a rally to that 0.618 level, measured from this high to this low here. Perhaps we can move here probably in the next couple of sessions. Perhaps this 21 is going to catch up a little bit with price, and then perhaps we're going to have another drop to the downside, and that's going to be a nice opportunity to short. So keep this chart on mind, have your alerts ready, because usually when this chart gets to resistance, then the market usually also gets to resistance. So it's a good way to have kind of that two-way analysis in the chart. And then let's take a quick look at the UVXY. I think this is a pretty important chart right now, because what I have found is usually that the UVXY tends to move before the market. And why do I mean by this? Usually the UVXY changes the structure way before the Nasdaq composite will do it. And it makes sense, because if you think about it, the UVXY is basically kind of insurance for what could happen in the market. So one way to hedge is by buying the UVXY. So you can see that the UVXY had a pretty decent trend to the downside that coincide with the trend to the upside in the Nasdaq composite. But what I love about the trend oscillator is that you can see right here that we started to kind of form this base. You can see that the trend oscillator was already moving to the upside, meaning that we had a bullish divergence while price continued to move lower. The trend oscillator was already moving higher. So given that we have this kind of divergence, I was expecting a change in trend in the VIX, and that's exactly what we're having right now. You can see that we're trading inside a channel as well. Right now we have a squeeze. However, the trend oscillator is already at the midline and we have resistance at that level. So my expectation is if the market happens to rally, if the VIX continues to trend in this channel while the market rally into resistance, I want to get long the UVXY, right? I want to get long the UVXY because I think that this channel has a high probability of breaking to the upside, and then I'm expecting a strong move in the VIX, in the UVXY. So keep this chart on your watch list. I think that this gets invalidated if we get a daily close below this level right here. So basically kind of a close below 9. Perhaps then we can reassess, and then we're gonna get new information in the market. But for now, the UVXY is looking bullish, and I'm expecting a breakout soon. So let's see how it trades. Keep this chart on mind. Keep this channel on your chart as well. I think it's gonna be really, really useful. Now let's take a look at TLT. As mentioned, we're gonna take a look at the bonds, and you can see that the bonds they're changing the trend, right? It seems that this right here was just a short covering rally, and now we're trending to the downside. And if the bonds are trending to the downside, that means that TNX is trending to the upside. If TNX is trending to the upside, that means that we're expecting that the market is expecting these rate hikes and everything that's happening in the Fed, this tightening in the monetary policy to continue. So usually what happens is when we are changing the cycle, usually what moves first is bonds. So as long as bonds do not trend to the upside, I think that the probability of the market turning is really low. So just to look at the TLT quickly here, you can see that we are also trading on a channel. You can see that we are basically trading below this bullish structure. We're trading below 110. I think that any rally into this upper part of the channel, into these 618 levels measured from all the swings that we had, and that 21 exponential moving average is going to be an opportunity to take a trade in bonds to the downside, and then that probably is going to coincide with the market finding resistance. So keep this chart in mind. I have 2 active sell signals. You can see that I have my active sell signals here. We have a squeeze. We have a trend to the downside. So I don't see any reason to think that this is going to turn right now. Could it turn? Of course, but my indicators are telling me that the right side right now is the short side in bonds. And then finally, let's take a quick look at the TNX. We are also trading on a channel, right? Trading on a channel to the upside. We have bullish structure in the trend oscillator. We have a squeeze that fired to the upside. We are trading above that 0618 level. You can see the 0618 level measured from this high to this low right here. And as long as price is above the 0618 level, we should expect a retest of the highs, right? Because usually when a counter trend rally fails, it tends to fail with a high probability of time, with a high probability rate of success at that 0618 level. So if we didn't fade at that level and we're actually trending above it, I think that we're probably going to come, perhaps undercut it a little bit, but then recup it. And then I'm expecting more upside in the TNX. But of course, we have to wait and see. And then I think we can take a look at we can take a quick look at GBTC, which is basically Bitcoin. As I sometimes use Bitcoin also as an indication of what is the risk appetite in the market. And you can see that Bitcoin is basically trending lower. Right, we're below, right? We are We are below this 50 daily moving average. We tried to move above it. We failed. The trend oscillator went below the midline. Again, we have a squeeze that is firing to the short side. You can see that we are basically trending on very structure, right? We are trending below this 1280 level right here. We're trending below this 1288 level right here. So as for now, I think that Bitcoin, if we happen to rally, I do have a kind of a divergence here in price kind of finding a little bit of a base. But I think that probably we're just going to find resistance at that 21 exponential moving average. We of course have to see, but I think that you keep it super simple, right? We're below that 50 daily moving average. If we continue to trade below it, I think that there's a high probability that we will continue to trend to the downside in GBTC, meaning that Bitcoin will also continue to trend to the downside, meaning that there's not much of a risk appetite in the market, and we're gonna continue to see more sell-off in the broader equities as well. So that's basically what I have for you guys here. I want to keep this video super short. My analysis, basically my summary of my analysis, is that the right side of the market, as for now, as for today, is the short side. We had a really amazing rally. It was just a short covering rally for now. And as long as I think this level is going to be pretty important in the Nasdaq Composite, this level right here, 12,438. Keep that level in your charts. If we continue to trade below that level, I think that you just favor the bears and then just go with the trend. Try to wait for any rallies into that 21 exponential moving average, and then just short those rallies and continue to trend this market to the downside. So thank you so much, guys, for watching. I hope this video was helpful. And if you have any questions, you know that you can send me a message in Twitter. I also have a community there, which we are a lot of traders, and it's going to be amazing to talk with you in that social media as well. So thank you so much, guys. Thank you so much, guys. And I wish you the best of luck. Thank you. Peace.